So what is SMC and how can we use it? So we know that SMC is smart money concepts, or it is institutional concepts. And we use a different range of tools, from imbalance, order blocks, and also liquidity. Now, today we're going to be taking a look at order blocks and how we highlight the correct one. Let's get into it. Hi guys, so welcome back to the Social Traders YouTube channel, and today we're going to be having a look at order blocks and how we can actually highlight the correct order block. Now, as you know, if you've been following our channel for some time, we have traded patterns and we understand price action and how the market moves, from that raw price action point of view. Now, we still utilize patterns, and we use a mixture of patterns and smart money concepts or institutional concepts just to kind of refine that entry process and make it a little bit more systematic. But we still feel that patterns and discretion are just absolutely invaluable, and we will continue to use them, throughout our trading, forever and ever and ever. Now, a common mistake and a common issue that we have kind of noticed within smart money concepts is the issue to find an order block. Now, some people will become confused with this, and some people will choose the wrong order blocks. Now, we know that when we see the market, push in one direction, and we do break structure, like this, for example, we can see that we have now broken structure to the downside. We know that something in this leg of price created that, being an order block. Now, some people will be looking for, something around here, and it might just be the last bullish candle. Some people might be looking for something around here. Some people might be looking for something around here. So again, there is that kind of discretion that you do need to use when locating an order block as well. There is going to be, more than one area that is actually quite probable. And it's pretty much impossible to gauge which order block it's going to be. So there's a number of ways around this. You can split your risk, or you can, take all of the order blocks if that's what you want to do. But what we've kind of noticed is when we have these patterns in play, it makes it really easy to spot where the order block is. The fact that we have a pattern kind of just avoids all the noise and highlights where that order block is. So that's what we're going to show you in this video here. So before we go any further, guys, make sure you do leave a like on the video, subscribe to the channel, and also drop a comment down below. Do you agree with our opinion, or does yours differ? Let's get back into the action. So we're on the 8-hour time frame here, guys, and we are on Euro CAD. Now, what we can kind of see here is the market has impulsively pushed to the downside, which we can see. So we know that if we see an impulse in one direction, we want to see an ascending correction for that continuation. That's typically how the market moves. Now, what we can see is the market is impulsed to the downside, and we have kind of got this descending nature to price. We can see that price is actually becoming quite descending. Now, we know that when we push down and we start to become descending, we know there's a good chance that we can reverse and go and push to the upside. So looking at this, we can then start to draw on our relevant levels of structure. Now, as we've been trading for quite some time now, we have, traded multiple different ways, and, we've kind of figured out how to draw patterns, and we've understood all the different variations. Now, we know that price action and patterns repeat themselves, which is why we use them. Price action and patterns accounts for people's emotions within the market, which is essentially what trading is. Now, we've also found that patterns don't have to be picture perfect. Patterns are never going to look the same every single time. So what we can do is kind of take our understanding and our experience of trading and apply that to understanding how to draw patterns. Now, we can see here that, this is kind of, the overall structure. We can see that this is kind of the low of this price action. So what we can do is then copy and paste that and bring that to the high of structure. And I'd argue now that this is our structure. This is the level, and this is the focus for me. So what we can kind of understand now is we have two kind of high probability areas within this structure. we have an high probability area down here, and we have a high probability area up here. So these are kind of the areas we want to be focusing our attention on. Now, because we know that this price action is descending, we know that we want to potentially be looking for a long position, okay? So that's kind of what I'll be looking at here. Now, looking at this, what can we see and what can we understand? So as we looked at that example in the first place, what we want to see is we want to see a break of structure, and then we'll be looking for price to come back into orders and continue a move to the upside, okay? So that's kind of what we're looking for here. Now, if we focus our price action, around these areas, and we take a closer look at this, we can see that the market was moving down. We made a low, lower high, made a low, lower high, made a low, and then we can see the market pushes to the upside there and breaks our high, okay? So we can see that we have had a break in high there. So what that kind of suggests to me is that within this leg of price here, there was actually an order block that was created. So what I'll do is I'll just mark that off, and I'll just annotate it so we can see where that break of structure was. Now we can see there's a wick there, but if we go down onto the 4-hour time frame, we can see that we do get a slight body close above there. So we can see that we have had a very, very discrete body closure above that level, which is why this is perfectly valid. Now, if I just drag that out just a little bit more, there we go. So now what we can assess is that there will be a there will be an order block within one of these legs of price that actually created that break of structure. So what we can kind of see is we do have one level here that could be an order block, and we do have one level down here that could be an order block as well. Now, the reason being is this is one big leg that pushed to the upside and broke structure, but we can also see that price pulled back into this area here before the break of structure. So we can kind of guess that there is two order block levels there to focus on. So for example, if I draw out our first level, like so, and I just drag that across, we can see that price action has already come and mitigated that once. And we haven't quite had the push away that we usually want to see, okay? So if we just play this out, we see that we push to the downside, and then we go and push to the upside. Now, what we can also see is, if we focus on this middle of the price action, that's what we was talking about, where we've got our high value area down here, and we've got our high value area up here, okay? So we don't want to be taking anything that's in mid-range, and that order block there has obviously given us a mid-range trade. We can also see that we have multiple levels of buying pressure here, which would suggest that we are going to push below that in order to gather the liquidity. So if we now look at this from our point of view and how we'd go about this, we can have a look at it like this. So if that is obviously an order block, we can see that it did create imbalance to the upside, and we can see that price was drawn back to that to mitigate it, which is fair enough, but we didn't get the reaction. Now, the reaction is obviously going to come from that high probability area that we have actually gone and highlighted. So our last bearish candle before the break of structure is obviously this big candle here that does have a wick to the downside. So that is our order block candle. Now, that gives us a very, very wide range. So we know that we can actually go and refine that some more. So what we can do is drop down onto the 2-hour time frame, for example, and take a closer look at that. Now, that is our big bearish candle, so that is what we would class as our order block. Now, if we actually see the bullish candle that didn't go and push above that, we know that we can actually rein that in to the bullish candle, okay? So that now gives us a slightly tighter area, and we can then drop down once more to the hourly for this example, and we can actually see that, okay, this one actually wicked below. So this would be our last candle, and this for me is our order block. So this is the level that I will now be looking to put my focus on, and this is the area that I will be looking to take a trade from. Now, as you can see, this has now given us that really low area within the market. It's given us that last point. It's right down at the low of that structure and therefore makes it more high probability. So we know that we can now place our limit at the top of this area, and we can place our stops just below this area. Now that's one way to go about it, and we can see that we do have a rather large stop loss there. So what I'm going to do is I'm just going to play that out, and I'm going to wait for some lower time frame confirmation in order to go and get involved. Now you can see that we have come into that area very nicely, and we have tapped it, and we are now reacting. So for me, this is now a good area to drop down onto those lower time frames and have a look at price action. So dropping down to the 15-minute, what can we see? So we can see that, okay, we do have a clear high within the market here that we have now had a body closure above. So we can mark off that level there, and we'll just annotate that. So you can see we've now had a break of our highs. Now, there's a few levels again that we can kind of focus on here in order to go and take a trade. So we can see here that we had a push, we had a pullback. So this is our last bearish candle that created that break of structure. Or we can focus on the more extreme, which we could argue is this big bearish candle here with the wick to the downside. It's a very, very similar scenario to the larger time frame where we have that smaller red candle on the pullback, or we have that big red candle with the wick right at the bottom. So again, you could split your risk and you could have half a position here and half a position here. But what I'm going to do, and what I like to do, is I do like to focus on the more extreme, which would be this lower one for me personally. So I'm now going to remove that hourly one so we can focus on the 15-minute. And I'm going to drag that down, and I'm going to drop down a few time frames. So I'm now just going to drag this to the smaller candle there. And then I'm going to drop down onto the 5-minute once more. And again, we can see that big bearish candle that went and pushed to the downside. And we can see that, we have taken out lows here before taking out highs. So for me, I do like that big bearish candle. And we know that we can then drag that into the bullish candle as it didn't engulf it. And that gives us a little bit of a tighter range there to go and focus on. So this would now be my kind of refined point of interest. And then what we can do is place a limit at the top of that order block, and we can bring our stops to the bottom. And you can see now instead of a 28 pip, we've got an 11 pip stop, which is just a little bit tighter. Now, there's a few ways that you can go about these small time frame refinements. And if it's something that you are interested in, again, we will be teaching that within our course. Now, what you can see is price does start to make its way back down. We can see price action is quite slow here. And if I just play that out now, just so it speeds the process up a little bit. And then I'll actually drop to the higher time frames just so this doesn't take an absolute eternity to play out. So this is now our area of interest. As we can see, price action makes its way back down into these areas. And then in this part here, we can see, okay, price action could be reacting off something around here to move to the upside. But we can also see that we have, we've created those equal lows within the market now. So naturally we have liquidity below this level. So again, it gives cause for one push lower on price action there. And as you can see, we push down, we get tagged into the position, and we go and move to the upside. So this is a great example of how to use those patterns to locate those orders. Now we can see here that we are now running around 14% on this position. So really, really happy with that one. And then we'll just continue to play this out. And as you can see, we do then get some more commitment and another push to the upside. So if we go back to the 4-hour time frames here, this would be a good area to kind of, contemplate closing out of, for around 20%, or up at the highs we have around 26%. So that would have been a really nice position. We could potentially highlight the fact that we do have orders sat over in those positions there. But again, just a great example of how this strategy works and how utilizing those patterns to your advantage as well. How they can really be beneficial for you too. So that was a really, really nice position there on EuroCAD. This kind of just removes the noise, understanding where those patterns are. It gives us, two ranges to look for. It gives us a high probability area down here and a high probability area up here. You can see then that did kind of remove the noise of looking for this order block, so we could focus on the lower order block. We then zoomed into the smaller time frames, waited for that break of structure that swayed the probabilities in our favor, and then we managed to take a really nice long position, up to these areas here. And obviously you could have managed that however you want. Now, again, we can see more upside here on this pair as we have, now broken highs to the upside yet again. So this could suggest to us, that we are in that uptrend. We are now breaking highs to the upside yet again. And we could see, again, multiple different layers tested here. We could see price come back into these areas, or we could see price make its way all the way back into the lows as well, as we did create that imbalance. So yeah, that's kind of how we go about things, guys. If that does interest you, do check out our website. We do have a full in-depth course, as well as many other great tools to help you in your trading journey as well as a fully fledged community of like-minded individuals. So if you do enjoy that, do check that out. Do make sure you leave a like and subscribe to the channel, and we will see you in the next one. Cheers, guys.